Assalamu alaikum everyone of class standard 8 class of 2019 of e.hub. I am Manarat Ahmed, your accounting teacher. Today I will be discussing about the points we have discussed from class 1 to 5. It's more like a revision summary that we have discussed in our class. So let's begin. First, we learn the definition of accounting, and by definition we learned it's a very easy thing. Accounting is the process of recording transactions. Okay, we get it, it's a process. Okay, but we don't get the point, we don't get the term that is transaction. So our next question is, what is a transaction? Transaction means exchange of goods and services which have money value or monetary value. What do you mean by that? For example, if I give you a pen and you give me a pencil, it's an exchange. But does it involve money? No, it doesn't involve money. But on the other hand, for example, if you like take a rickshaw and go to a destination, you pay your rickshaw some money. In exchange of what? In exchange of service. We are talking about goods and services here. Hope you know the difference between two. In exchange of service, you are giving the rickshaw puller some money, and then we can call it a transaction. It's not just an exchange, it involves money, so it's a transaction. Another example of this is simply we can put it in this way. For example, like you pay me your teacher money for my services, like I teach you this stuff. So when you pay me the money, it's an exchange. Okay. Okay, moving on to the next slide. But before moving on, I would like to say something. Like for example, accounting, the definition of accounting is not that much easy actually. There are other terms like accounting is a systematic way of recording transactions in a chronological order. There are like other stuff too. So we can call it like it's more like an incomplete definition. Okay, we will learn it later. Moving on, we learned that transactions can be divided into two parts. There it should be an S. Okay, transactions can be divided into two parts: debit and credit. Under debit, we learned there are some items such as purchase, expense, assets, and under credit, we learned that there are items like sales, revenue, and liability. Okay, we will discuss these items under if you but in an order. If I ask you, for example, tell me whether assets or asset is a debit item or credit, some of the students might get confused. So in order to remember which item is what, debit or credit, we invented a rule which is Powers rule, which we can say it's the golden rule of accounting. Okay, Powers rule is a rule like আমরা এটা বানিয়েছি. It's not written in any books. It's more like a cheat code we give while playing video games like GTA. Okay, it's a cheat code. It's not written in the book, so it's not something anything official. The pearls, you can divide the pearls word in two parts between this, and PEA represents something and RLs represents something. You can guess it now that P represents purchase, E for expense, A for assets, sales, liability, revenue. We get it. But apart from these six items, there are two other items which are drawings and capital. Okay, you know what purchase means. Purchase means when you buy anything. Expense means when you spend on something. Asset is something you actually own. Okay, and here we learned that opposite of purchase is sales. When you sell anything, it's quite easy. Opposite of expense is revenue. When you earn something, there should be another word within bracket, should be income. And the opposite of assets is liability. Liability is when you owe something. Owe, that means you have some duties or responsibilities that you have to fulfill. For example, if you owe someone some money, then it's a liability. Okay, other than these six, we have two other items, drawings and capital. The definition of drawings is withdrawal of money or assets from the business by the owner for personal use. By drawings, we mean when the owner takes something away from the business which actually belongs to the business but not to the owner. For example, if I am the owner of a center or coaching center and guests come into my place, my house, and I take all the furniture from my coaching to my from my office to my home, then I can call it drawings. Okay, then the next thing we learn is capital. Capital means addition of money or assets to the business. It's written twice here, to by the owner for business use. That means when the owner gives something to the business, we can call it capital. And you can also call it investment, but here we learn capital. Okay. Next we learn purchase and sales. We know what purchase and sales means. Apart from this, we have to know the ways in which purchase and sales can be done. There are three ways mainly in our syllabus, that is cash, check and credit. But when I say our syllabus, that means there are other ways too. In modern world, there are other ways, like আমরা সবাই জানি, in Bangladesh, way of payment is very popular, and also in foreign countries like MoneyGram, and in Bangladesh it is Bikash. You know Bikash, UPay, MPay, this sort of stuff. They pay the money online and someone else receives it, and there is no cash involved. These are online payment systems. Other than Bikash, there are also ways which is not popular in Bangladesh yet. There is Bitcoin, so we'll get to that more in the class. Okay, there are apart from the payment methods, we have to know these things like purchase are made from suppliers and sales are made to customers. যাদের কাছ থেকে আমরা পারচেজ করি তাদের আমরা বলি সাপ্লায়ার, অ্যান্ড যাদের কাছে আমরা সেল করি তাদের আমরা বলি কাস্টমার্স। আমরা এটা নিয়ে একটু সামনে আরও কথা বলবো। দ্যাট ইজ, আচ্ছা আমরা কয়টা ওয়ে দেখে আসলাম পারচেজ এন্ড সেলসের? তিনটা, ক্যাশ, চেক অ্যান্ড ক্রেডিট। উই আর ডিভাইডিং দিস থ্রি মেথড অফ পেমেন্ট into two, that is cash and check on one side and credit on the other side. Okay, from people from whom we purchase goods or anything is a supplier, right? Oh, so from whom we purchase by giving cash or check, we call them cash supplier, and from whom we purchase on credit, we call them credit supplier. Okay, credit supplier sounds okay, but there is also some other names involved in accounting. Credit supplier is often called trade payables. The word payables, is it justified? Yes, it is, because that means you have purchased goods from them on credit and you have not paid for them yet. That means you will pay for them in the future. That's why they are using the term payables, not paid. Okay, and creditors is also another word, but it was used in the previous syllabus, so we are not going to talk about that. We are talking about payables. Sales can also be divided like purchase. Sales can be done in three ways, we have learned before. Sales can be divided into two parts, cash and check and credit. Cash and check means, by sales we mean people to whom we sell goods by cash or check. We call them customers, okay, but especially to whom we sell goods by cash or check, we call them cash customers, and to whom we sell goods on credit, we call them credit customers. That means we have sold some goods on credit to some people and we will receive money from them. We have not received it yet, but we will. That's why we gave them an accounting name, which is trade receivables or debtors. Debtors was used in the previous syllabus, but it's not used often now. Okay, here on I can ask you a question like, can you tell me, if I ask you a question like, tell me whether it's true or false, all trade payables, listen very carefully, all trade payables are suppliers, but all suppliers are not trade payables. Is it true or false? I'm telling you again, all trade payables are suppliers, but all suppliers are not trade payables. It's true, because there are suppliers from whom we purchase goods by cash, and all trade payables are not suppliers. Okay, there are two types of suppliers and one of them is trade payables, but not all of them. Okay, same thing is applicable here for trade receivables. I'm not going to discuss it now. Quite easy. It's quite easy. Okay, moving on to the next slide, we can see expenses and revenues. Expenses and revenues. Expenses and revenues can be done in two ways, cash and check. Yes, it is common sense to us that we cannot pay anything on credit, we cannot receive anything on credit. If we cannot receive anything on credit, that means it's due. We are about to receive, but we have not received it yet. Okay, there is a thing. Sales is often written as revenue. So if we go back to one of our slides, that is on the slide of Pearl's rule. Sales and revenue is often mixed, and instead of writing sales, most of the people write now revenue. It's a different thing. I will discuss it in the class. Okay, moving on, we will talk about assets now. Assets can be divided into two parts: non-current assets and current assets. Non-current assets are assets which will bring benefit to our business for more than one accounting period. That is okay, for more than 1 year, I can say. 1 year, that means assets which will stay with us for a very long time. For example, if you look at your surroundings, you can see assets such as your TV, your AC, your cell phone, your mobile phone, your fridge, micro oven, washing machine, whatever it is, your laptop, computer, PlayStation. These are assets which will stay with us for a long time. But current assets will not stay. For example, your paper, pen, these are current assets. But in business terminology, we don't write paper, pen. We have, as if you have attended the classes, then you can see in your notes that we have written uh, in closing inventory, trade receivables. Trade receivables means, remember trade receivables, people from whom we were about to receive money, and we consider them as assets. Why? Because they owe us money, and when we will receive the money, it will be for cash. Okay, then we learn examples of current assets as trade receivables, then cash at bank, cash in hand. Remember? Other than this, under non-current assets, we have learned the term one accounting period. One accounting period and one accounting year is a different concept. One accounting period means any length of time that a business will operate. One accounting period does not necessarily mean that it will be one accounting year. Okay, for example, a business can run for 3 weeks. For example, Dhaka International Trade Fair runs for 1 month. Ekusha Boimela Book Fair runs for 28 days. So they have a different accounting period, which is not 1 year. Then, under non-current asset, we have learned of a few things. For example, land is a non-current asset which do not depreciate. Depreciate means depreciate. Depreciate comes from the word depreciation. Depreciation means when the value of a non-current asset falls. For example, if you buy a cell phone, for example, if you buy a Note 9, then the value of Note 9 will fall after 2 years. Why? Because it will get used, new technologies will replace it. That's why. But land is an asset, is a non-current asset, যেটার ভ্যালু কমে না। আমরা we have seen ads like 10 বছরের দাম বেড়েছে 10 গুণ. That means land is in decreasing, but people are increasing. So more people have to fit in to the same amount of land. That's why land value common. Okay, that's a different topic, global warming. Okay, next we learned that goodwill is an intangible non-current asset. That means goodwill আমরা calculate করি business, but there is no application of that in our syllabus. That's just আমরা জানার জন্য জেনে রাখলাম এটা. Okay, then we learn liability ও দুই রকম, two types of liabilities: non-current liabilities and current liabilities. Non-current liabilities means we have some duties, responsibilities or obligations that we will fulfill after one accounting period. One accounting period, after one accounting period means, for example, long-term loan. For example, we take loan to build houses. We take loans of 10 years and we will repay the loan after 10 years. Not necessarily in the current accounting period. These are long-term loans or non-current liabilities. And then we learn current liabilities. That means liabilities or duties, responsibilities or obligations which we will pay within the current accounting period. For example, we learn this thing, trade payable. Remember trade payable, people from whom we purchase goods on credit. Trade payables is an example of current liability. Why? Because we must pay them their due amount within a few days or few weeks, 14, 20 days, whatever it is, because we have to keep our faith. We have to keep faith with them. That's why we have to pay them the money due within a short period of time. Then we will discuss the type of math. Then we have discussed the type of math we will go through in our syllabus. We will do in our syllabus. Number one was journal, then ledger, then trial balance. Journal, ledger, trial balance actually comes from the same question. So you cannot tell like these are separate chapters, no, but this type of math you will have to do under one question. We have started doing journal, so we know how the format of journal looks. This is how it looks. Date, details, debit, credit column with a pound sign. We have missed it here. Then we started doing journal entries of purchase. This is quite difficult for people who don't appear in the class within time. Okay. These are the questions that we learned. You can take a screenshot of this. Okay, moving on, we have solved these questions. First, first transaction was January 1, purchase goods on credit. Okay, remember the PARS rule, PEARLS. PARS, P is a debit item, remember? So when you purchase something, it becomes a debit item. So whatever you purchased here, that is goods, is a debit item, but there is a catch. You cannot write goods is like a combination of so many things. Like you cannot do accounts for a duster or an eraser. Okay, so goods means a combination of a lot of things. So instead of writing goods, we will write purchase. Okay, while purchasing, we will write purchase instead of writing goods. So while preparing the journal entry, remember, while preparing the journal entry, we will write Jan 1 plus the date. Then in the debit side, we will write purchase. Okay, then the amount. Okay, now remember what we learned, that we purchased goods on credit. That means people from whom we purchase goods on credit. Remember the name? Trade payables or receivables? Trade payables. Okay, trade payables. That is, their name is trade payables. So we will learn their name on the credit side. Why? Because they are a liability. Okay, the first question is always tricky, but you will get to know better as we go along 3 4 5 number or 6 number entries. Okay, first one looks like this. Okay, then you will have to write a narration here, actually what to show to show actually what happened. You have to give it within a bracket. You have to write it like this: being purchased goods on credit. This shows that the transaction is over. So you will have to give a line here like this. Okay, I'm summarizing it once again. We have purchased goods, so instead of writing goods, we have written purchase. So that's, we cannot write goods, that's why we have written purchase. And we have purchased goods on credit. That means we still have to pay the amount. That's why it's a liability. That's why we are writing trade payables here. Okay, and if we know the name of the person from whom we purchase goods, then we will write their name, just like in transaction number 2. Here in transaction number 2, the question is quite the same as transaction number 1, but instead of writing trade payables, the general term, we will write the name of the person from whom we purchased, whose name is here. His name is Watson. So instead of writing trade payables like in Jan 1, we will write, here we purchase goods, so we will write purchase, and we will write Watson. Why Watson? Once again, because we know the name of the person from whom we purchase goods on credit. That's why we are writing Watson. Okay. Okay. Transaction is over. That's why I will be giving a line below. Down. It should be January 2. Then in January 3, if you see your question, in January 3 they said to purchase goods on credit. So goods, instead of writing goods, I am writing purchase again. But this time they have purchased goods by cash. Purchase goods by cash. So that's why instead of writing trade payables or Watson, I will be writing, guess what? Cash. Okay. So cash we are writing here. Amount is 300, and the narration is being purchased goods by cash. The narration part is quite easy. I'm not going to repeat it over and over again. The transaction is over. Done. Next up is January 4, purchase goods by check. Okay, purchase goods by check. So purchasing goods by check means, so goods, instead of writing goods, we are writing purchase. But right now, instead of writing check, we will be writing bank. This is a common mistake most of the students commit. There are two forbidden words we have learned till now. Instead of writing goods, we are writing purchase because we were purchasing. So যদি আমরা যদি goods sell kori, so then we will be writing sales. So that's for another part. And instead of writing check, we will write bank. Okay, and in the narration part you can write check, no problem, but in the answer part here you have to write bank. Keep it in mind, এটা খেয়াল রাখতে হবে. Okay, the next question is purchase machinery by check. See the difference between the first four and number 5 is, in the first four they asked us to purchase goods, but now we know what to purchase and it's a definite name, so we are writing the name, and the name is machinery. So in the debit side we will write machinery debit, amount will be 500, and we have purchased it by check, so we will write bank. Okay, and the nation will be being purchased machinery by check. Okay, done. Next question is purchase machinery by cash. So it will be machinery again in the debit side like the previous one, and instead of bank it will be now cash. This is something we have actually done before, that's why I'm going through it very quickly. Next up is being purchase machinery on credit. Okay, this is where most of the students commit the mistake. Okay, so okay, we have purchased machinery, so machinery 700, but we have purchased on credit. Remember the person from whom we purchase goods on credit, not Watson. In general, what's the name? Trade payables. So we will write trade payables. And in the next question they have given the name, we have purchased goods, we have purchased machinery on credit from Watson, then we will write Watson. Those who are watching out of the class, those who are not my students, remember that we have this question in our hands, that's why I am going through it very quickly. Next slide is about the journal entries which is related to sales. Okay, sales goods, sold goods on credit, sold goods on credit. Okay, we will go to the journal entries. We have learned Gen 9. In Gen 9, okay, first one is always tricky, like the one we learned in the previous journal entries of purchase. Sold goods on credit. Remember the person from whom we used to sell goods on credit. What was his name? What was their name? Trade receivables, right? So we will write trade receivables. Why trade receivables? Because trade receivables are current assets. Remember the examples we have learned while doing current assets. Trade receivables are our current assets and we will receive money from them, that's why trade receivables are debit, because assets are debit item. And we will sell goods, we have sold goods, so instead of writing goods we are writing sales here. Please don't make the mistake of writing purchase once again, because goods was written as purchase while we made purchases, and goods will be written as revenue of sales because we are selling goods here on credit. Okay. Okay, if they give you the name of the person to whom we are selling goods, what will you do? You will write their name. So in January 10 they told us to do journal entry of the transaction sold goods on credit to Emma. So instead of writing trade receivables we are writing the person's name, which is Emma. So Emma will be debit, and since we are still selling goods on credit, so we will write, instead of writing goods we are writing revenue. Okay, this is the end of January 10. In January 11 they told us to do journal entry of the transaction sold goods by cash. Okay, so now we have the source cash, so instead of writing trade receivables or Emma we will write cash because we are receiving money. Cash is debit and trade receivable and revenue on sales is credit, since we are still selling goods. Done. In January 12 we are still selling goods, so but this time by check, so we will write check, right? No, we will write bank. Okay, remember we cannot write check, so goods by check. This is the end of Jan 12. Moving on to Jan 13, we have sold equipment. this time equipment by check. So instead of goods or revenue sales, we will write equipment. Why? Because a specific name is given. Just like what we have done in our journal entries of purchase, a specific name was given, so we will write bank in the debit side because we have sold goods by check, that's why bank. But instead of revenue or sales, we will write equipment. Okay, if you have any problems, then you can knock me personally, then I will elaborate it more. In Jan 14 they have sold equipment by cash, so it will be cash in the debit side, and equipment in the credit side is because we are selling equipment, no goods. In Jan 15 they have sold equipment on credit. Remember the person to whom we were selling goods on credit? Not Emma. It's not gonna be Emma forever, it's gonna be trade receivables, the general term. So trade receivables is debit and equipment is credit. But in Jan 16 they have given us a name which is Emma, so we will write Emma instead of trade receivables, we will write Emma debit. Oh, it's a mistake, typing mistake, sorry. Sorry again. Okay, this is what we learned in our last class. Okay, there is something we will learn new. This is the journal entry of returns. Please take a screenshot of this. These are journal entries of January 17 and January 18. Take a screenshot of this. I'll give you 5 seconds. Okay, I guess we're done. In January 17, they told us to return goods to Watson which was previously purchased on January 2nd. Okay, in January 2nd, let's check out the answer of January 2nd. In January 2nd, the journal entry was like this: purchase debit, Watson credit. Okay, take a note of this. Sorry. Okay, in January 2nd, it was like this, that we were the buyer and we purchased goods from Watson. So that means we purchased goods from Watson. That means goods actually came from Watson to us. Can you see the cursor here? It shows that the goods were sent by Watson to us and we purchased them. So it was like this. So check out the arrow. It moves from right to left. Remember that? But in January 17, we were returning goods to Watson. It's more like, for example, I bought 10 pens from Watson and I'm returning one of them. That's why the process will be like this. We were the buyer as usual. Watson was the person from whom we purchased, but this time we are returning. So as you can guess, the arrow will be moving from left to right. Why? Because we are sending the goods. It's gonna be like this. Okay, so can you see the difference, that the process has been reversed, that actually originally the goods actually came from Watson to us, but right now it's going from us to Watson. The process has been reversed totally, so the journal entries will also be reversed. So I'm going to be writing it like this. I'm going to be writing it like this. Here the answer: purchase was debit, Watson was credit. It's going to be like this. Now Watson debit and purchase credit. Little bit of side of this. Amount will be 170 and also 170 here. Okay. Okay, but we have to add a new word here, that is return, because it's not purchase and the journal entry has been reversed, and to show that it has been reversed for returning, we will add this word return. Okay, purchase return. Narration will be like this: being returned goods to words. Okay. Okay, I'm repeating this once again, that why this journal entry has been reversed, because the process has been reversed. We purchased goods from Watson. The process was the goods actually flowed from right to left, but while returning it flowed from left to right. The process has been reversed. That's why the way of recording things also reversed. And we just added one word here, which is purchase return. Another name of purchase return is return outward. Why outward? Because the goods are going out of our business. Okay. Then we will learn the journal entry of January 18. This time they have told us that Emma returned us goods costing pound 180, which was previously sold to her on January 10. In January 10 we sold her goods. Let's check that out. January 10, we sold Emma some goods worth pound 1000. The journal entry was like this. Remember the time when we will be returning the goods, that when Emma will be returning the goods, the process will be reversed. How? Let's check it out here. The process will be like this, that when we sell goods to Emma, we send goods from us to Emma. That means the goods flows from left to right. Okay, us to Emma, us to Emma. Okay. But while returning in January 18, Emma will be sending some of that stuff which were probably faulty or damaged while sending to us. So it will be like this. Emma will be sending us goods to us. Why? Because probably we have sold some of the items which were faulty. So it will be like this. See the process. The goods actually flowed from left to right while selling, but while returning, the goods flowed from right to left. That means the process has been reversed. So if the process has been reversed, the way of recording things will also be reversed. So the journal entry was this. I'm showing you this once again. Emma debit, revenue credit, right? So we will be recording this in the opposite manner of this. So we will be returning it like recording it like this. Revenue debit 180 and Emma credit 180. Sorry. Let's give it a bit of space. Okay, but it does not necessarily show the thing that it was returned. So we will add a word here with revenue return. Okay, just like what we have done while writing purchase return, revenue return. Another name of revenue return is, you can guess, return inward. Why inward? Why not out? Because we sold goods to Emma and Emma is sending us the goods. That means goods are flowing into our business, from flowing from Emma to us into our business. Goods are coming back to our business. That's why the word in is used. So we will be writing it like this. The narration: B, goods returned to us by Emma. Okay, this is the end of January 18 journal entry. Okay, this is it for now. We will learn more of these journal entries in our class, probably in the next week. And keep in mind that you will have to copy these things in your copy, okay, in your classwork copy, so that we can discuss it even furthermore. Thank you for the time. This is all from me right now. Allah Hafiz.